the returns start to look a bit crazy. So what Bitcoin has done for the investor that got in this time about June 2011 is rewarded them tremendously. Hey everybody, welcome. My name is Matthew. Welcome back. We are taking a look today. It is August 16th, 2024. Taking a look at the good old Bitcoin power curve, power trend line, power regression. Those that have been following my channel for a while know that I've been doing variations of this since about 2018. A few other folks online these days making it more popular. From my perspective, just to say, again, this is not trading or financial advice. It's just to show you the nature of how Bitcoin is growing. It's often been described as a proxy for growth, the price curve, and as its best fit is a power trend line, that clearly means that the growth is not exponential, it's not linear, and it's not logarithmic. 96% R squared here. This has actually gone up. This is a rounded figure. It's a little over 95.5% R squared to be precise, but used to round down to 95%. Now the fit is even getting stronger to 96% these days. Anyway, what I want to show here is if we could graph the days in the past at each price point, if you purchased Bitcoin at that price point and held it to today, what would your compound annualized return be? And similarly, if you held it from today into the future based on the power regression trend line, what would your compound annualized return in the future be? Okay, so I'm going to graph the trend line right now. There you see it. It's a nice inverse looking trend line from the power curve itself, and very smooth. And this simply looks at the rate of growth of the power trend line at each price point held till today, and then, like I said, out to the future if you purchased today and held out into the future. So obviously in reality, nature is never as simple as we model it. So I'll actually show now the real historical compound growth returns as a dotted green line. I'm going to show that now. All right, and here we have it. Again, this simply looks at, if you look at the peaks here, obviously 2011, June, we get up to $30. You see that the return is a peak in the other direction. Still a huge return from a compound growth standpoint, but just roughly, I'm picking a point here, June 27th. If you purchased Bitcoin, and let's even take off the noise here. Let's take off the current R squared. Let's even take off the trend line compound growth. Okay, let's go back to, it's hard to catch these things with the mouse, June 28th, 2011. Okay, Bitcoin was screaming to $30, but on June 28th, one of the prices that day, presumably this is the close, but there wasn't such great market data at this time, around $17.50. Okay, $17.52. Obviously, compared to $60,000 Bitcoin today, it's a tremendous buy. But if we just told you the gross return, 50,000% or whatever it is, I don't actually even know off the top of my head. That's incredible and it's a great return for sure. But if you want to understand it comparatively with the rest of the world of finance, you got to look at compound growth. Okay, and compound growth simply is going to annualize, compound that investment over each year until you get to the price today. Right, this is what this calculation will do, and it tells you the return that you would have made. Okay, so again, if you bought one Bitcoin at $17.50 here on June 28th, 2011, $17.52 to be precise, you held till today, roughly $60,000 per Bitcoin. I'll show you that price in a second. August 16th, 2024, your actual real compound annual growth return is 85.4%. Now, that's a huge number. Now you have to look at the world of stocks, bonds, S&P, government 10-year treasury yield. Those things are rising actually now because of the inflation after COVID. But historically, okay, you're talking stocks, maybe 5 to 10%. Okay, and I've shown these before. I'll show them again. The same trend lines of S&P 500 or total return S&P when you include dividends. You're looking at somewhere between 7 and 9%. Bonds, even less than that, if you didn't count the last 40-year bull market, of course. But, even looking throughout history, okay, bond returns, fixed income yields, 5% per year. So what Bitcoin has done for the investor that got in this time about June 2011 is rewarded them tremendously, not without risk and volatility and uncertainty in the market, but that's what it is, okay? And it makes sense to look at it this way. This is an apples to apples comparison. And by the way, this chart is backwards. It's not backwards compatible. Okay, so you have to run the numbers every time. And just to be clear, to run it forward to today, the rest of the calculation, if you took one Bitcoin at $17.50 in 2011, okay, you increased it by 85% the value after a year. Then you take that value, increase it by 85% the next year. By the time you get to today, And I'm going to zoom in here. Time to get to this price today, a little under $60,000 per Bitcoin. This is the number that I'm using. The latest price today at August 16th, 2024, $58,294 per Bitcoin. That will give you that 85% per year right there. 85% per year, June 28th, 2011. So this is a more apples to apples comparison way to look at returns and investments. So if you were Roger Ver or an early Bitcoiner here buying Bitcoin sub $1, a dollar in 2011 or 2010, even less, your returns are tremendous. If you had the fortitude to hold until today, 143% per year. That's just an astounding return compared to anything else in the financial universe. Now, of course, as Bitcoin develops, as the power curve matures, this return is going to come down. So you see as the price goes up, if you're still buying, your return goes up here in the crypto winter. As the price went down, you're back up to 83% compounded here all the way in 2015. If you bought for $233 per Bitcoin in 2015, due to the time decay being less than 2011, you're still getting about an 85% return per year. Okay, so that's also interesting to look at. But then of course, if you bought at the very peak in 2017, $19,000, $20,000 per Bitcoin, you held until today, until $60,000, $59,000 Bitcoin today, that only represents a 17.7% return. Okay, so that's how it looks. And then obviously you can see here it gets very jagged. As we get closer to today, the theta goes away. There's no time decay really. The returns start to look a bit crazy because remember, we're doing an annual figure, but the returns might not necessarily be held for a year. Okay, so if you bought here in the peaks, remember we're below this value now, 63,000, $64,000, $67,000 per Bitcoin 5 months ago, held till today, you'd be down on a year-on-year basis, 20%. Okay, so you need to hold a little bit. You need to have the fortitude to deal with that. Again, not financial advice. I'm just showing you how this works. And then I stopped the calculation a month back. Okay, because it just would start to, the returns would be very volatile, very crazy. Okay, if you bought this little dip here in July at 55,000, you're getting a 50% year-on-year return, annualized return. So that's how it works. Taking a moment to remind you that this show is brought to you by Trezor, home of the original Bitcoin hardware wallet. For over 10 years now, Trezor means business in Bitcoin security and functionality. When using their wallet software Trezor Suite to connect to the Bitcoin network, you're automatically connected via Tor, protecting your identity and giving you full control of your coins in a fully open source manner, both on the software level and on the hardware level. So head on over to Trezor.io to grab your brand new Trezor Safe 5 with a secure element, as well as a ton of available accessories to back up your keys and keep your coins safe. But now, again, we can run the same returns as I showed you at the beginning of the video, not just on the real price, all right, but on the power trend line price and hold till today, and that is this dotted line. We have this nice inverse modeled behavior of Bitcoin growth and Bitcoin returns and Bitcoin pricing modeling off the power trend. And here we can go into the future. Okay, so again, just to go back to our example, mid-June 2011, so you bought it now June 11th here, $30 per Bitcoin, 77% per year on the actual price. That's below trend. So you see that the trend of returns now, based on actual price, look at the solid black line and the dotted black line, trend line price is only $1.65. So again, we're overextended here. Above trend, overvalued if you will, but I don't necessarily like that word here with Bitcoin. We're overextended on the trend. So if you had bought the trend price, you should have, would have, could have gotten 126% at this time in June 2011, but we got ahead of our skis here based on the all-time trend. So that's how it works. And now if we go out till today, and I just want to show you, I'm going to zoom in right into today here. Okay, so now notice how there's a little blank space here for today because I'm not calculating the modeled compound return trend because it's the same day, right? But let's just look at the trend line really quick. The solid line, look at the solid line now. I'm even going to take off the growth. Okay, let's look at today. We're below trend. We can see the actual price, $58,000 per Bitcoin. The trend is $77,800 per Bitcoin, so we're below trend, fine. But if you look out today, August 16th, let's go to August 17th. All right, $77,848 to August 17th, $77,927. Okay, this is an increase of $79 roughly per day on the trend. Okay, so we have an increase of $79 roughly on the trend. So what does that represent? If you bought the trend and held one day, what's your annualized growth return, compound annual growth? It's right here, 44.9% per year. Now, again, the price is well below trend. Okay, so again, theoretically undervalued, but again, not financial advice. If you purchase Bitcoin today at $58,000 per Bitcoin, let's just say tomorrow the price screams, tomorrow as of the recording of this video, August 17th, we jump up to $77,900, you'd get well over that, obviously on a compound annual growth, well over that as a return, but we're just modeling returns here based on the trend. So the trend is roughly at 45% per year. That's what the trend is now. So back in the days when Roger Ver or Eric Voorhees, Trace Mayer, these guys were really pumping Bitcoin, promoting Bitcoin, I should say, at the in the early days in 2011, the trend, okay, the actual return could be anything, right? They could get 85% per year, they could get 110% per year. The trend itself was somewhere in 2011, mid 2011, 125% per year. And it went down, down, down the trend. I'm looking at the dotted black line here. We go down from 125% per year, even higher, right? 150% back in, if you bought it around Bitcoin Pizza Day, 160% per year return for Bitcoin. The actual compound growth return today, 45% per year. 45%. That's presumed, all right, if we get back to trend from today's price, of course, it's going to even be higher because, the price is below trend at the moment. But this is the model. This is how it looks. And you just need to use your eyes. Don't worry about p-values or r-squareds or s-ratios, s-values, I should say, standard errors from the trend line. Don't worry about any of those concepts. Even don't worry about the r-squared. You can see that these trend lines very closely follow the price. So that's nice. That's helpful. Helps us understand where Bitcoin has grown and where it possibly could grow to. At the moment, we're increasing our trend line growth about $79, $80 a day. All right. And that's going to increase gross figure, but the percentage will fall a little bit. Okay. So it's 45% now, today. And on an annualized basis, on a compound annual growth basis, if you hold out to these different periods. All right, now this is from today. Okay, so the dotted line before here was until today. You bought in the past, held until today based on the trend line, looking at the dotted black line. Now, if you're modeling into the future, this is from today. Okay, so based on if Bitcoin goes to $114,000 per Bitcoin by September 2025, so on and so forth, just on trend, not talking about any deviations from the trend, you're down to about 40% per year Bitcoin. Let's go all the way out to the end of 2030, 36.5% per year based on the power curve, the power regression, 96% R-squared regression trend line for Bitcoin. So these are strong numbers regardless. Okay, like I said, stocks, bonds, 5% per year, 7% with dividends on stocks, maybe 9%. Long are the days where you get 20% on 10-year government bonds. Maybe they'll come back with such high inflation. Fine. But Bitcoin's still well above that. Okay. And to really dig deeper, you'd have to understand the compounding effect. You can do it here though. You can really see the compounding effect. You bought Bitcoin at $15 per coin, $18 per coin. You hold it till today. Okay. Those are, very, very strong returns. 85% per year actualized. The trend line would be even higher, 125%. But starting to take away the noise if you can. Look at the long-term picture. Yes, the price is going to be volatile. Yes, you're going to have a new genius every day on Bloomberg saying that Bitcoin is going to fail. And you will have these volatile returns, right? You may be well under trend if you bought here in 2017, all right? The trend line growth was 62% per year, held until today. Your actual growth, only 19% per year. Okay, still great, still double, still more than double stocks and bonds, but that's what it is. Okay, you buy during the crypto winter times, above the return trend, right? Trend is only 73% at this point, September 2015, when Bitcoin trend line was $587 per Bitcoin. Actual price, $230 per Bitcoin. So you buy under trend, you're gonna be looking better. Sorry, I didn't say it. You buy under trend, your actual growth would have been 75% versus roughly 70%. I went away from September 2015. 86% versus 73%. A lot of percentages here, but you can see the point is you buy below this trend, generally it looks better for you return-wise. You buy above the trend price-wise, the return will look worse for you. And of course, it will be more volatile as we get closer to today. You take away the time decay, things get more volatile. But as things smooth out, as you look back in time, you can start to see how the model makes sense. Never financial advice. I'll continue to show these videos. Let me know in the comments if this helped you. And thanks for watching.